So let's do this one more on structure before every other thing. Structure is like a foundation for every trade you are taking. You understand? Market structure is like a foundation for every trade you are taking. Do you get? So it's like telling you where price is coming from and where price is heading. So it's like giving you a direction. You understand? So if you're able to identify the structure of the market, once you're able to identify the structure of the market, you solve like more than 50% of your trading problems. The rest is just for you to figure out where can I enter from and where can I exit from. Your choice of exit. You start, and obviously, you know, we have two structures. We have three. We have the bullish, the bearish, and the ranging. Right. So, and the ranging markets, which is something that moves sideways. Now, when the market is bullish, it always gives you that sense of higher high, higher low, higher high, higher low. Now, your business, and this is how market works. Every low for a bullish market is meant to create a higher high. Every low that is formed for a bullish market is meant to create a higher high. You understand? Every low that market forms is for a bullish market is create a high. Now, after that higher high, do you get it? After that higher high, you must expect a retracement. So that's why you see me. Once price break, this is another thing I need to tell you guys. Once price, another thing to help you avoid losses. Once price breaks a high on the bullish market and gives you a new higher high, don't look for buys. Wait for it to retrace back inside. Do you get it? Before you start looking for buys. Don't look for buys outside the high it just broke. Wait for it to retrace. Then you look for your buys. So you can whether wait for it to get to a low, or you wait for the retracement to end and wait for your entry confirmations. Always wait for entry confirmations. You can see if Dr. MJ is telling you, say the same thing just now. Wait for a bullish engulfing. You can either use a bullish engulfing, or you can use those of the patterns, the W pattern, which is a bullish a buy pattern. So, but basically say this: after every break of structure, you understand, break of structure to the upside, wait for that retest to follow. Don't just enter as soon as it breaks. Wait for that retest to follow. That's another way to avoid unnecessary losses. Do you understand? Wait for that retest. Now, something like this now, you will ask that, oh, on this time frame, give you another thing to look out for. Because gold does this one a lot. It doesn't really retrace back fully inside. Now you ask that, oh, this is a low here. This created a higher high, but it did not retrace back inside here. You understand? Does that mean you're not going to buy? Another important question. Does that mean you're not going to buy? No. You still need to just keep your eyes open. You understand? You need to keep your eyes open to see if it has formed another low outside. If it has formed another low outside of this higher high. I don't know if I'm making sense. So you need to keep your eye open to see if it has formed another low that gave a new higher high. So that low that gave a new higher high is now your low for buying. See now. See this trade now. I'll give you this correct playbook. Look at this again. But it broke out. But what? It has not retested inside. So now, if this low here gives you a higher high, breaks above here, gives you a higher high, which I think is going to happen as soon as market opens, gives you a higher high till you get it. Your job is to, this low now is now your new low in which price is not supposed to break. This low, price is not supposed to break it. Do you understand? So you are now looking for buys inside this area. So if price now creates a new high, you want to see that retrace back inside here before you start looking for your buys, because you know that price is not going to break this low. This is a new low that has given you a higher high. I don't know if you understand this part when it comes to structure. Do you get it?
Yeah. But the only thing is sometimes even with that new low, price will not even come anywhere close to that. It will just retrace a little bit and then continue the buy.
That's why I gave you an example. I said, if price gets, because now you must also catch every move too. Think about it. But if price retraces back inside and doesn't get to your new low, you know what to look out for. You are just look, as long as you see that retracement, you are beginning to look out for what? Entry. This is where your strategy comes in. Mr. MJ uses fair value gaps. You know you are pure price action and trend line trader. You cannot begin to look for price patterns to form. Do you understand? Because you know price is not going to break this low. So you are now waiting for price pattern to form. As soon as you see that retracement, you're waiting for that retracement to end, and you're waiting for price pattern to form, a W pattern, which is a good choice for buying. Now, also, if price does not give you that W pattern, you shouldn't be interested in entering that trade, except it comes back to this low and give you a bullish engulfing. Gives you a bullish engulfing on the low, because your low is serving like is where you find buyers. Basically, your low is like a protected space for the bullish market. Price is not meant to break your lows. You start. So at every low, you are always to be looking out for your entries, except price wants to do like what it did here, liquidity sweep. And also you can also avoid cases like this liquidity sweep, if you still wait for entry confirmation. You don't just jump on the trade as soon as it gets to that low. You wait for entry confirmation. You wait for your bullish engulfing to form or your W pattern still. Mr. Ala, are you clear on this?
Yeah.
Do you understand? So you don't need to jump on any trade. Like, you don't need to be in gold. When it comes to trading gold, you don't need to be impulsive. You need to wait for the price to tell you what to do. Like, you need to just react based on what market is doing. Seriously, when it comes to gold, so that you don't take unnecessary loss, because gold is very tricky, but it's also easy to grasp if you pay attention and just monitor what it's doing. Monitoring it in the sense that you are not taking trades, but you are just waiting for patterns that you can recognize to show up, then you strike. Remember again, we want to make sure that time frame you are in, because gold is generally bullish, so that's why I'm using more bullish market structure. If I want to use a bearish market structure, I'll use BTC right now. So yeah, gold is naturally bullish, so you're using much of a bullish market structure, right? So now, whatever time frame you are in, you're looking to take your trade, you want to also see that time frame is bullish. You don't want 15 minutes is selling and you're looking for buys on gold. No, you want to make sure that 15 minutes is bullish and you're looking for buys. So that's why I say boils down to generally structure. You understand? You don't need to jump on. You don't need to just jump on it at the low. You can also wait for it to form a bullish structure for you, which is very easy. Just especially if you're on the 5 minutes, easy for you to see. You get it? Are we clear? Look at this one now. Look at this trade. Basically, you see that gold it gives the same example, the same playbook. Got to this low. Let's say you're looking to buy around here. But you can see that it didn't give any confirmation here, right? But what happened? When it retested back again, what did it form? Did you see the W?
Yeah, W pattern.
Exactly. So gold is something that it gives in most times, like it's one thing for giving entries confirmation. Gold they give you that entry confirmation you need, solid one before you jump on. You just have to be patient to see it. You understand? You don't need to, oh, this is going to buy. Even if it leaves you, let it go. Like, be okay with letting setups go. That's when you'll be profitable. Be okay. The moment you start being okay with letting setups go that doesn't match your confluence, you will be profitable. You understand? The moment you start letting setups go that don't match your own personal trading confluence, you start you'll be profitable. I'm giving you things based on the strategy. So the two people here trade two different strategies. But the MJ trade SMC or and uses fair value gaps mostly for his entries, and also see add extra entry confirmation. Uses fair value gaps for his zone. Me, I use supply demand. He uses fair value gap for his zone, but also waits for extra confirmation, which is likely a candlestick pattern. Mr. Ola, on the other hand, trades price action instant. So what I just do is identify the trend, then look out for a low to buy from. Now, if price gets to a low, you are looking to buy from a valid low. A valid low must be a low that gives you a higher high. If it doesn't give you a higher high, it's not a valid low. So you wait for price to come back to your valid low on which you are looking to take your trade, and print also an engulfing or a W pattern. Similar things. And funny enough, most strategies kind of like align in the same way. It's just that some are precise than some. They kind of like align in the same way. If you know what you're doing. That's why I really don't focus more on strategies that much, because they both tell you the same thing to do. They both just tell you the same thing. So if you get your structure right, if your structure is right, both price action trader and an SMC trader can both make profit from the same setup. But what might differ? Their entries might differ. One might enter earlier than the other based on strategy. I don't know if you're getting it. I don't want you guys to be strategy based traders. I want you to, when you are trading, you should pay attention to instead market structure. Strategy should come last. Strategy should be how you enter and how you exit. That's only where strategy is useful.
You are very right too. Everybody, like you rightly said, might have different kind of setup, but we're all trying to hear that.
Yes, now you're all just doing the same thing basically. We're all just buying or selling. You're not doing, you're either buying or you're selling. It's just that based on strategy, one might enter earlier than the other, you stand, yes. Or one might exit earlier than the other. Just strategy.
Let me say something here.
Yeah.
Value gap, I notice most time when I have my demand or supply zone and the fair value gap in that area, I notice that most times it gets that doesn't touch my demand or what do you call the supply zone. It doesn't touch the fair value gap and then it reverses. So I start to. That is why most times you see that I put that fair value gap.
Yes, you're 100% right. Because that's why I say these days, if you've noticed, remember what I said in the beginning of the class, these days price really come back to like supply demand zone. What it just does is try to fill up the nearest fair value gap and just bounce from there. But also, I've noticed it too over the years. That's why when I was teaching in the beginning of the class, I say if you have a supply or demand zone, make sure that supply or demand zone has an imbalance, basically has a fair value gap. If it has an imbalance, there's a likelihood, there's like a 90% chance that price will come and tap you in, then go your way. But if it doesn't have an imbalance or a fair value gap, it means that zone has been mitigated somehow. And if it has, there's a likelihood that price is not going to come back there. Do you understand? It happened a lot on a lot of setups that I caught this recently. This card JPY happened. Though I have a setup here on Euro card, which I also doubt if price is going to come back because there's no much in there. It's not like a. It also happened on. I also have one on now. This one I have on CAD CHF. I'm very positive about it that price is likely going to come back. because at this point I kind of like see a little fair value gap here on this candle. So it's kind of like giving me a confidence that okay, price likely going to come back up here on this particular setup, which will be just another setup I'm looking to trade this week, which will be analyzing soon with the rest of the class. So I'll give you more example again. Let me go to now GBP USD, the same thing. This GBP USD, I had let me explain this trade. I had a buy. Funny enough, I had a buy and this other block. But what did I notice? Price did not get there. Use that. Price did not get there. What happened instead? Bro. Reversed. And bought. Now, while we are selling here, I called the sell on this guy on Friday. Another bad trade, but I was able to avoid it generally for everybody. I was able to avoid it for everybody because I told them, as soon as I told them to exit, they not even take next 5 minutes. This thing spiked up. But this is how I know. Solid trade. It was a good for me. It was giving like a good supply area to sell from, right? But also I noticed where price was coming from. You understand? And this market generally is an uptrend, and price is coming from this low that I gave this higher high. Do you understand? So basically, this was what a retracement for what a new higher high. Do you get it? Do you get it? So where this sell would have made sense would have been if price broke this low and gave a lower low. That's when this sell would have made sense. But price did not break that low. Instead, it bounced from the demand zone, and the market is on an uptrend. So now, when a lot of people were looking to sell here, I too was among looking to sell because I saw some confluence on the lower time frame. I saw some kind of confluence on the lower time. I still was giving like more a sell. But again, there's another thing you need to know. Weeks are what I've noticed in trading is this also. Weeks are areas where liquidity rests. If you study very well, you notice that liquidity rests on week a lot. Do you understand? So seeing this week here just made me know that okay, this area price took it out. This is it. I don't want to explain more, but if you go to your lower time frame, you basically understand that you see that this is a low and price took it out with that week. Now, liquidity is now resting here on the GBP USD. So two things are involved in this trade when I was taking the sell. I was like, if price can break, that's why I sent a video detailing, I was explaining, if price can break past this week, then we'll have a sell structure to this side. So where next we are waiting for, we'll have waiting to see if price can also take out this other week. Because most times, what I've noticed is not most times, liquidity always rests on this week or at the bottom or at the low or at the high of the week candle. Liquidity is resting there. So now if price can close below it, it will signify like sellers are now in control of the market. So I explained that. So as soon as I saw this engulfing form, which was giving equal lows W pattern, okay, engulfing equal lows W pattern, I just say exit because the trade is invalid. Price is failing to even break this week. Price is failing, not even to, price cannot even sweep it, more or less break it. So buyers are very strong in this market. So boom, I said everybody close. The rest of people that did not close, glory be to God, to their accounts. But I just said everybody close because the trade was invalid. This when you are trading against the trend, yeah, you have to always be careful. You have to map out your zones very well. You understand? You have to map out your zones very, very well if you are trading against the trend, so you don't get burnt. You understand? So reason for that bad trade, totally avoid it. I learned that one from GBPNZ. Remember GBPNZ? What do we say? If you remembered, Mr. MG, remember GBPNZ? That we said this guy was going to what? Sell. Did you remember it, Dr. MJ?
So what?
This GBPNZ that we said was going to sell last week, me and you. I think we even said it on the group too. GBPNZ. So I said that it was going to sell. And when did I say it was going to sell to? You can see how that led to this downside. And we're on the buy. But I've seen the sell ahead before I even hit our stop loss. That's how you know. That's how you know when you know what you're doing. Because even me, after taking a trade, I'm not resting. Anytime I take a trade, I'm not just relaxed. Because there's something I understand. When analyzing, there's kind of a mentality that comes with it that your brain just programs you to always want to win. Look for you. So whatever setup you're looking out for, you're always thinking is a win setup. Is a win setup. As long as you see few things, let's say you have like few confluences you look out for, and you just see one or two of them, you want to execute the trade. You just count it as a winning trade in your head, and you plan to take it. So I've understood that part psychologically, that my brain is always wanting to, win every trade, and it can, therefore in that process I can be picking wrong trades, and I would know just based off analyzing. So even after taking the trade, I always come back, delete everything, and look at it from a fresh eyes and see what is going on. So coming to the daily time frame, what do we see here? We saw equal highs. Price again was failing to break. You can see liquidity is resting on this week. Price was failing to even sweep it, not like more or less break past it. Price was failing to break past it. Do you get? So now price was failing to break past it. Reversal. Now our zone was respected. Fine and good, because one thing about the strategy I used to trade with price, I've noticed it, whether it's a reversal or in line with the trend, my strategy, price 100% will respect that zone. I've noticed it. So that's one bad side about it. My strategy doesn't just fail and go straight to stop loss. Price will 100% respect that zone first. One thing I've noticed about it. So whether you're trading reversal or it's even a bad trade, as long as I see the complete confluence of my strategy, I always notice that price will respect that zone first. So that's the bad side, because it will trick you into thinking it's going to play out. But it's not. Sometimes it won't play out if your structure is wrong. That's the thing about my strategy. If you get the structure wrong, which I think is with every strategy basically, if you get the structure wrong, your strategy will fail if you know what you are doing. Do you understand? But if you get the structure right, your strategy will definitely play out. So I think it's general thing with every strategy. So now the bad side about this thing, which was playing out. So I was like, let's see how it plays out when market opens, because it was a Sunday like this. Yeah, Dr. MG were the only two people in the class there. So I said, let's see how it played out. Then as soon as market open with straight L. Straight L. No even room to think about closing. It just went for a stop loss straight. To show you. So now watch something again. As soon as price took out this low, I said it's not going to stop. It's going to keep selling till it goes to where the daily low, because it's rejecting from a daily high. Price rejecting from a daily zone. Don't expect your 5 minutes, your 15 minutes, your 4 hours to hold. Your 4 hours zones are not going to hold. Your 4 hours POI, your 4 hours, if price is reversing from a daily POI, a daily zone, your 4 hours, your 2 hours, your lower time frame, basically, POI is not going to hold. You understand? So where price is going to reverse to, it's going to reverse to back to also the daily, another daily POI. So that's where I came up with the method, time frame for time frame. You start. So if price is rejecting for basically a 15 minutes high, you should expect the continuation from a 15 minutes low. Now, if price is rejecting from a daily high, you should expect it to reverse from a daily low. So hence, and where is the perfect daily low? This is the daily low, because this low is what gave the last higher high. No other low has given a higher high. What this one did was just liquidate this high. Remember, I told you liquidity is always resting at the high of and low of every week. So price liquidated that high, then boom, okay, then continue selling. Now watch again. What happened again? If you zoom in, you are going to see as soon as price liquidated this low again, reversal. You can see that it's failing to break this low, and I can promise you that there's like 100% chance, like let me not say 100, a 70%, 80% chance that this thing buys from here and gives you a new higher high. Except the only instance it can break this low is if it wants to change trend. The only instance price will break this low is if market wants to change trend. But if market is not changing trend, it's not going to break this low. It's going to buy from this area, this zone.